Alright, so we are at slide number, is it 20? Break-even analysis. Alright, so now we are on break-even analysis. As I mentioned to you in the previous class, there are three types of break-even analysis. So usually in questions, one of you have asked the question dalam group, I think, bila kita orang pun test tu, let me see. It's most probably going to be either next week ataupun next week on the 29th. So it's either the 25th or the 29th of June. So naga rupa kita habis syllabus lah. Alright. Alright, so Nur Zawani, I think kita terklik present. Boleh sih kita see present. Okay, Madam resume. Okay. Okay. Alright. Okay, so let us start. It's okay, mungkin kita tertekan kali. Alright, so there are three common break-even measures: accounting, cash, and financial break-even. So this kind of question yang selalu keluar exam, so you might expect it to come up for your test tu je lah. Alright, so accounting break-even, you can see that the calculation is lain. Alright, accounting break-even is fixed cost plus depreciation divided by sell price minus variable cost. Cash break-even, so because near cash, there is no depreciation here lah. Okay, and then financial break-even, so you can see there's an element of cash flow disturb. Alright, so it's different types of formula. Alright, however, this formula is applicable when there's no tax implication. If there's tax implication, we use the tax shield formula for cash break-even and financial break-even. Alright, and for accounting break-even, EBIT is equal to 0. Alright, so there are two types of costs that are important: variable cost and fixed cost. Alright, average cost and marginal cost. So average cost is total cost divided by number of units. Marginal cost is the cost to produce one more unit, which is equal to variable cost per unit. Alright, so let's try this question. Your firm pays 3,000 ringgit per month in fixed cost. You also pay 15 ringgit per month to produce a product. What is your total cost? Alright, and what if you produce 5,000 units? Can you fill in the table first? After this, Madam akan tunjukkan Madam pun jawapan lah. Alright, so let me, where is it? This one, for students. Okay, so it's supposed to look something like this. You know. Okay, this one. Alright. Okay, so you try to fill in first. What is the total cost? Total cost is fixed cost plus variable cost. Okay, and then what is your average cost? So your average cost, you take the value of total cost divided by total number of units. So in the first one, it's 1,000 units. And then what is your variable cost? Marginal cost, that's your variable cost per unit. All right, and then you do the same for 5,000 units. Okay, cuba kira. Alright, so once you're done, you let me know. So kalau dah siap, boleh bagi tahu madam. Dah siap lah, Atika? Alright, so dah siap. So this is very easy. Sekejap. Alright, so 3,000 and 15 times so you have 4,005, is it? Is it 4,005? Ataupun 15, oh sorry, 18,000. Average cost. Okay. So this one, total cost. Sorry. Alright, so do you guys get the same answer? Yes, huh? Alright, so okay, so this is very simple. Yep. S, okay, boleh juga S. Alright, so the next one is accounting break-even. So it leads to a zero net income. Alright, so that means net income sama dengan kosong lah. Tadi is average marginal cost. Okay. Q is equal to fixed cost plus depreciation divided by selling price minus variable cost. Alright. It's okay, Jessica. Madam ngatik kita aja. If a project cannot break even on an accounting basis, then it's not going to be worthwhile. Accounting break even gives you an indication. So how a project will impact your accounting profit. For cash break even, Q is equal to fixed cost divided by selling price minus variable cost. Financial break even, Q is equal to fixed cost plus OCF. So OCF results in zero NPV. And selling price divided by variable cost. If there is a tax implication, all three formulas cannot be used. We use a tax shield formula for cash break-even and financial break-even. And for accounting break-even, EBIT is equal to zero. So let's try the first exercise. A new product requires an initial investment of 5 million. depreciated to an expected salvage of 0, okay, over 5 years. So depreciation is 5 million divided by 5, 1 million per year. The price of the new product is 25,000 each. Variable cost per unit 15,000 each. Fixed cost 1 million. So what is the accounting break-even and cash break-even point each year? So first step, we calculate depreciation. Then we use the break-even formula for accounting break-even. All right. And then after that, you calculate the OCF. And then you calculate the cash break-even. Okay, cuba kira dulu. If you are done, then you can let me know. This is very simple sebab Madam dah polanya pun dekat table dengan kita orang. The reason being is that so that senang kita orang ingatnya pun flow lah. Alright. All right, let me know once you are done. P and V apa? P is the selling price, V is the variable cost. So you are given the price and the variable cost. Alright, so Atika done. Kita tunggu yang lain dulu ah. Okay, Sarah also done. Yazid also done. Alright. So let's see the answers. So depreciation was 1 million. So Jessica also done. This one very simple lah. Alright, so your fixed cost just now given in the question is 1 million. Alright, plus depreciation. So you get 2 million divided by, let me see, 10,000. So accounting break even, you should get 200 units. OCF, you should get 1 million, and cash break even, you should get 100 units. Do you guys get the same answer? Yes, huh? All right. So this one is very simple. Okay, so let's do the next exercise. So you can see now, bila madam pecahkan macam tu, dia jadi lebih simple lah because madam dah beri step. If madam tak ada beri formula je, macam tadi nak dekat which one? If mula-mula tadi, if you were only to look at the formulas, mungkin a bit confusing lah. Alright. So bila dah dipecah, then it's very easy for you to calculate. Alright, so let's go on to the next exercise. You're required to calculate the break-even analysis of the following. Sales price per boat, so this is your selling price. Variable cost, 20,000. Fixed cost, 500,000. Initial outlay is 3.5 million. Straight line basis, 5 years. So 3.5 divided by 5 is 700,000, I think. Alright, and required rate of return is 20%. Alright, so you're required to calculate the accounting break-even, OCF, and then cash break-even, and then ada sambung lah. So for this one, OCF if NPV is kosong, so your calculation dekat sebelah tu sebelah kiri. Alright. So cuba kira dulu. Okay, Atika is done. Let's wait for the others first. Arina is done. Okay, Sarah is done. Alright, so accounting break even, you get about 60 votes. Alright, so from the 60 boats, this value, Q, kita ambil ke situ. Alright, so that's the value you bring forward. And then OCF, you should get about 700,000. And then cash break even is about 25 boats. Okay, and for the next one, have you guys done this slide as well? Yes, Alistair. Yang lain? Alright, so the next page, OCF, you should get about 117. Oh, Yazid belum. Alright, so let's give you some time. Alright, okay, done lah. So OCF is 1170333. Using your financial calculator, you should get, it's almost the same lah. 1170328.96. Lebih kurang lah. Alright, so this one taknya maki manual lah. And then break even is about 83.52 bots ataupun 84 bots. Okay, so the next one, let's say there's a tax effect. So you masukkan all these values. Alright, so Madam dah angkat this year, which makes your job easier. Accounting break even is about 60 bots. Alright, so you, let me see. Alright, so you ambil the 60 units. Alright, S-nya pun Q, dekat situ 60. So your accounting break-even point should be 210. And the cash break-even point, this one is RM. This one is units. Alright. And the financial break-even point is 94. Did you guys get the answers? The same answers? Yes, sir. Alright. Yang lain? Alright, so can I continue? Boleh repeat. Alright, so let me just repeat. Yes, boleh repeat. Okay. Okay. Alright, so let me just repeat. Now, you are given these details. So, of course, you might be thinking, sikitnya detail. Tapi, it's the same formula yang pusing-pusing sikit aja. You are required to calculate all three break-even analysis given the following details. Sales price, 40,000. Variable cost, 20,000. Fixed cost per unit, 500,000. Your outlay is 3.5 million. Depreciation, 5 years. So, 3.5 divided by 5, you get about 700,000 per year. Required rate of return is 20%. Alright, so accounting break even. So you letaklah your fixed cost 500,000 plus depreciation 70,000. Alright, plus 700,000 divided by selling price 40 minus 20 untuk variable cost. So you get about 60 boats. Alright, so this is Q. Kan? So this is Q. So you ada Q di situ. So you gantikan Q tu dengan 60. Alright, so you have your selling price which is 40,000 minus variable cost 20,000 darab 60 minus fixed cost 500,000. So your accounting break even, you should get about 700,000. And then for your cash break even, which is your fixed cost, okay, this is the normal formula for break even, kan? Fixed cost divided by selling price minus variable cost. So 500,000 divided by 40 minus 20. So you get about 25 boats. Okay. So the next one, financial break even. So untuk financial break even, what is the OCF if NPV is equal to 0? So NPV is equal to 0 if the initial outlay minus the present value cash flow PVCF is equal to 0. So initial outlay is 3.5 juta tolak present value cash flow. So kosong lah. So what is present value cash flow? We do not know. Alright, so present value cash flow is actually OCF darab dengan present value interest factor for 5 years for 20%. Why? Because we get the value here, 20%. Okay. So you dapatlah, you pun OCF sama dengan 1170. So using your financial calculator, you can get this just in case you guys don't remember. 3.5 million PV, 20 years I over Y. 5 is N, 20 years, sorry, 20%, 20%. 5 years, and then you tekan compute and PMT. Alright, so you get 1,170,328. That is your OCF. Alright, so your financial break-even is fixed cost plus OCF divided by selling price minus variable cost. So you should get 83.52 boats. Okay, next one, accounting break-even when net income is equal to 0. So what is net income? The income is EBIT minus EBIT times tax, which is equal to 0. Okay, so you expand the formula and you get this. So you masukkanlah 40,000 minus 20,000 times Q yang kita cari minus 500,000 minus 70,000, 1 minus tax is equal to 0. So keluarkan semua nombor ya and bawa ke sebelah. So you dapatlah accounting break even sama dengan 60. Alright, so the next one, OCF at accounting break even point. So what is OCF? Sales minus the cost 1 minus tax, tambahkan balik depreciation plus dengan darab dengan tax. So you get your OCF at 210,000. Cash break even, is 10 units. So you masukkan this value, selling price 40,000 minus 20,000, Q yang kita cari minus fixed cost 500,000 plus 1 minus tax, and then plus depreciation 700,000 darab dengan tax. Alright, so you get cash break even of 10 units. And then the last one, financial break even. Alright, so where NPV is equal to 0, your OCF tadi, okay, and minus the initial outlay. So using the financial calculator, this one you should get 1170329. Alright, so these are your values. Alright, which is 40,000 minus 20,000 times Q minus 500,000, 1 minus tax plus 700,000 times 30%. Alright, so you should get 94. So far so good. So if kita orang sure, try to fill in the numbers dulu lah. Alright, and then you check balik your answers with Madam pun answers. Alright, can I continue? So today we are going to finish chapter 8, and then after that we are going to go into chapter 9, finish chapter 9. Next class we are going to do chapter 11 and 12. So ada banyak lah kita mau cover because I want to make sure everything is finished before you do your test 2. Alright, so the next one is operating leverage. So operating leverage is just tengok hutang lah. Alright, the degree to which a firm borrows, alright, ataupun they rely on fixed cost. So high degree shows that the firm is capital intensive in nature. Alright, so DOL, degree of operating leverage. So makin besar DOL, so makin besar lah kita pun risiko lah sebenarnya. Alright, so the higher the fixed cost, the higher the DOL. It depends on the sales. So what is DOL? 1 plus fixed cost divided by OCF. Percentage change in OCF is equal to DOL times percentage change in Q. Alright, so using data in exercise 1, let's say initial investment is 5 million, salvage value is kosong, life 5 years, and the price of the new product is expected to be 25,000, cost, variable cost 15,000, fixed cost 1 million. Macam contoh tadi lah. Suppose that sales ada 300 unit, what is the DOL? Alright, cuba kira. All right, let me know when you guys are done. All right, Atika is done. Okay, Farina, Shahira also done. Okay, so let's see the answers. All right, so first you have the formula for your DOL, all right, which is 1 plus FC divided by OCF. So then you need to calculate your OCF. So in this case, it's selling price minus variable cost times the selling quantity is 300 just now. Selling price 25,000, variable cost 15,000 times 300 minus fixed cost is 1 million. So your OCF you should get 1 million. And then your DOL tadi 1 plus fixed cost is OCF is 2 million. So fixed cost 1 million divided by 2 million, so you get 1.5. All right, so percentage change in if what will happen to OCF if unit sales increase to 20%? So DOL is 1.5, percentage change is 0.2. And so the change is 0.3 or 30%. All right, so therefore OCF would be, we take this value 2 million darab dengan 1 plus 30%. So you should get an increase of 600,000 if the sales increase by 20%. So far, semua dapat jawapan yang sama? Yes, Alright, so this is very straightforward. Okay, so the next one is capital rationing. So this is a theoretical part of this chapter. So the situation that exists if a firm has positive NPV project but cannot find financing. So what do they do? So what they do is soft rationing. So nya ambil duit dalam company. This is what it means. Dia ambil duit dalam company untuk fundnya pun projects. So duit yang allocated to somewhere else, bayar supplier ke apa, dia si bayar lah. Alright, dia pakai bayar for that project. Okay, so soft rationing, we are bypassing a positive NPV. It should rectify the problem and we can use the profitability index to calculate. Hard rationing, capital is not available for the project. It can occur especially when the company is in financial distress. That means bankruptcy is a possibility. All right. So you guys have homework. The answers, let me see. I think we will discuss in the next class lah. All right. So I'm going to give you the homework first. June 2019, 1A, and December 2018, 2A. Alright, so madam buat homework dulu. I want to try and finish chapter 9. So kita si banyak lagi. Kayak chapter 10, banyak tu. Chapter 9 and then chapter 10 and then chapter 11 and 12. Alright, so today I'm going to finish chapter 9 as well. So chapter 9, as you can see, nyasi banyak. Alright, so chapter 9 si banyak. So let's try to finish it. This is a theoretical chapter. So some of you might be doing it for your assignment. Alright, so efficient markets and behavioral finance. So what is an efficient market? Evidence against market efficiency. Yes, slide Madam belum beri. I just realised that. Kelak Madam kah dalam WhatsApp. Alright, behavioral finance and 5 lessons of market efficiency. So what is an efficient market? So random walk theory. So random walk, it suggests that the stock prices, harganya si dapat diramal. It's random. Okay, it follows a random walk. So we do not know whether it's going to go up or it's going to go down. In short, this is the idea that stocks take a random and unpredictable path. For example, macam COVID-19. We didn't know that COVID-19 is going to happen. So when COVID happened, so of course the stock market was affected. Now, does it mean that when the stock prices went down, the value of the company fall? Kan? But does it mean that the performance of the company fall as well? Not necessarily. So that one is influenced by investor sentiment. But it's random lah. We do not know how investors are going to behave, kan? Alright. So efficient market hypothesis, according to EMH, stocks trade at the fair value. So you know that because of COVID recently, stocks were underpriced, kan? So the prices of the stocks, it fell. Okay, so when it fell, in the stock market, we call it a discount. So stock prices were selling at a discount. So if you are a smart investor, you would have bought some of the stocks. All right, but if you are not a smart investor, you panic, you would have been the one selling. All right, so now it would be impossible to outperform the market. Yes, it's true, because we don't know. The market is going down or is going up. We don't know. It's random. All right, it's very erratic. And the only way an investor can obtain a higher return is by purchasing riskier investments. All right. So it's pointless to search for undervalued stocks because the stocks are already priced at the fair value. All right. So there are 3 forms of market efficiency: weak form, semi-strong, and strong form. So weak form, maksudnya the market is efficient. Yes, it reflects all available information, and harga lama have no effect on future rates. Kalau dulu harganya tinggi, we do not know in the future harganya akan kekal or not. So given this assumption, rules such as one traders used to buy or sell a stock are invalid. We don't know. Alright. Semi-strong, kalau tadi all available information, all the market information, that's weak form. Semi-strong, all publicly available information. So yang di dalam syarikat, we do not know. Alright, so this one is especially true. Kadang-kadang syarikat mau go for merger, kadang-kadang mau bertambahkan hutang. For example, like recently kan, AirAsia nya buang pekerja. So bila buang pekerja, what happens to the stock price? It goes down lah. Kan? Why do the stock price go down? Because the investor perceive that AirAsia pun performance, sales will go down. That's why dia terpaksa buang pekerja. So that is publicly available information only when AirAsia announce. Kan? So bila dia dapat announcement, the investor dah terima announcement from AirAsia, then the stock price will be affected. So that is semi-strong hypothesis, EMH. So it incorporate the weak form of EMH. Alright, so all the information dah ada, including the publicly available information. Alright, and then the next one, strong form. So it yang available public and private information. For example, sekiranya kalau kita tengok stock market di Malaysia, if stock prices in Asia dah start turun sebelum announcement, so that means they have started, the top management dah start mula decision. So if the prices dah start turun before that, then we can say the Malaysian stock market is strong. Strong EMH. So we have to see the stock market balik lah. So if nya incorporate all public and private information, yes, that is a strong form EMH. Alright, for example, like currently, you would see that in the stock market, the prices that is uncertain or going down would be the education industry. Why? Because no classes. Kan? So the companies yang investors would be careful of would be macam Sidat Segi, Sidat Lim Kok Wing. There are a lot of groups, Taylor's College. So some of these groups are publicly listed. So these are the stock prices that you would see they are going down. The reason being is that the investors do not know how are these education groups, we call it, are going to get their income. Macam Sidak private schools, we have a lot of private schools in Malaysia, especially in KL, kan? So these private schools, the schools are off. There's no school. Are they being paid? How are they paying the teachers? Kan? So you look at the stock market. If the information is reflected in the stock price, we can say it's a strong form EMH. So evidence against market efficiency, there's some criticism. All right, so sometimes stock prices mungkin semestinya reflect the value of the company, but it also reflects the investor pun irrationality. So what does it mean by irrationality? Investor pun expectation, whether going up or going down. For example, because of COVID-19, some of the stocks, especially healthcare, will be going up because people expect that you are paying more for healthcare now because of COVID. Nak banyak income for the healthcare companies. So it could be irrational. Alright. Ada certain stocks yang sepatutnya asyik turun, tetap turun. So also irrational from the investor. And then the next one, behavioral finance. This is a field of behavioral economics. It proposes psychology-based theories to explain the stock market anomalies. Why does it go down? Why does it go up? So this is under behavioral finance. Why? Because investors are human. When they expect something negative will happen, risk averse. They do not like risk. So what do? They cepat-cepat jual. And bila cepat-cepat jual, stock prices will go down. Alright. Factors affecting relating to efficiency and psychology. One is the attitude towards risk. So usually investors, they do not look at the current stock price. They also look at the whether the total investment, the portfolio are showing profit or a loss, and beliefs about probabilities. When judging possible future outcome, individuals tend to look back at what happened in a few similar situations. For example, they will look, kalau COVID-19, they will look at what happened during SARS. Kan? So what happened to the stock market then? They will, another one is waktu Nipah virus. Because Nipah virus, it originated from Malaysia. So how did that virus affect the stock market? So then they will see, okay, avoid these sectors because ni akan go down, or let's go towards another sector because ni akan go up. So limits to arbitrage. So an arbitrager adalah investor yang membeli underpriced stock and they will sell overpriced stock. However, it's very, very difficult for you to find an arbitrager because usually stock market, the prices already reflect all available information. Alright. Incentive problem and subprime crisis. So this is what happened to the US property market in 2007 and 2008, menyebabkan property bubble and stock market crash in the US. Alright. So institution and players have their own interests. During the subprime crisis, US property market boom, whereby the value of the property prices naik more than 100% to 200% because they wanted to encourage people to purchase property untuk berhutang sampaikan nya sanggup bagi hutang kepada orang yang si layak berhutang. What do you mean by si layak berhutang? Siapa yang udah default, siapa yang gajinya si tetap, and what not. So at the end of the day, these people cannot pay the debt dan bank had to experience a lot of losses dan menyebabkan stock market crash. So this one is institutional problem. They can also push prices because of sidaknya pun motivation untuk mendapatkan untung. They push prices to go up walhal the prices do not reflect their value. So 6 lessons of market efficiency. One, market have no memory. Kan? Previously pernah rugi, in the future pun akan rugi. They will follow investor sentiment. So bak kata Tun Mahathir, Melayu mudah lupa. So not only Melayu, investor also mudah lupa. Alright. Trust market prices. So in an efficient market, you can trust that the prices are reflective of all available information. Read the entrails. So look at the information available. You look at the market prices, you look at the balance sheet, the income statement and whatnot to gauge, untuk menilai whether the stock market price is reflective of its value or not. There are no financial illusion. So the main concern of investors is cash flow, because they know that if the company has enough cash, walaupun rugi macam ni, nyaksikan lingkup. Contoh macam MAS, Malaysia Airlines, kan? Every year je pada rugi. I see je Malaysia Airlines bankrupt, and very recently they actually took the CEO of Petronas, one something, to menjadi CEO baru for MAS. Alright, so for investors, what they look is the cash flow. Alright, so they look at cash flow. Why? Because they want to see whether the company has enough cash to pay their current liabilities. As long as they have enough cash, it doesn't matter. Rugi pun, they still can survive. Alright, remember the do-it-yourself alternative. Alright, so this one is biasalah, investor, they will not pay others to do what we can do. If you want to diversify, so they will look at companies which one they will invest in. Alright. And the last one, seen one stock, seen it all. So investors, they do not buy the stock for the unique qualities. What they buy is for the fair return based on the risk available. Alright, if they feel like, okay, this one too risky, they sell. They will buy another stock. Alright, so these are the ones for chapter 9. We have completed chapter 9. In the next class, we will go into chapter 10. So chapter 10 nya ada a bit of calculation. Kata madam akan buat the slides. I think it should be ada a little bit of calculation. Alright, tapi sikit aja. So something like this. Alright, so kelak kita nangga. After this, I will give you the chapter 9 slides. Chapter 10, madam still mau haluskan sikit. Kelak I'll give it to you on Wednesday. And do not forget, you guys have homework. Alright, so this is your homework. We will discuss the homework on Wednesday as well. Alright, so you still have about 30 minutes for you to do your homework. But discussion will be on Wednesday. So for any questions? No question, Alright, so if no questions, that's all class. Anything you want to ask, you can ask in WhatsApp lah. Alright, see you guys on Wednesday and stay safe. Bye everyone. Thank you.